Well, India's plan to impose higher transaction taxes on the trade of equity derivatives, rattling investors. The measure reviewed during the government's budget announcement is intended to curb speculative trading amongst retail investors. Equities tumbled some 2% in reaction during the special trading on Sunday, although they have since bounced back. Rebecca Bundhun filed this report for CNA from Mumbai.
The Indian government plans to raise the securities transaction tax on equities futures trades to 0.05% from 0.02%. The announcement made in the budget for the next financial year beginning in April means higher trading costs for investors, leaving them unhappy. But with greater numbers of middle-class Indians investing in stocks, the decision is aimed at preventing retail investors from losing money on potentially highly risky trades. Shrey Jain is the chief executive of online trading platform Stocko.
Actually, government has been, looking at the, speculation that has been going on in markets, especially among the retail traders. So I think this is a move to dampen the excessive churn that is happening, and especially with respect to intraday trading and expiry trading.
But Mr. Jain says higher transaction costs on derivatives will impact daily investment flows in the market. Intraday and high-frequency traders will be the most affected.
These are the traders which essentially offer and liquidity and some depth in the market. So, the move we see could really impact in the near term some bit of spread. Also, comes at a time where Indian markets are already, trading lower based on global events that have happened. So overall, the sentiment is not been good.
Bloomberg reports that global funds withdrew more than $3 billion from Indian stocks last month, continuing a trend of foreign outflows last year. Investors fear the higher taxes could be another setback for a market that has been underperforming its peers in Asia. For CNA, I'm Rebecca Bundhun in Mumbai.